Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning. Good morning and welcome to a new episode of Chat and Chart. This is the London Session Open and this is your host, Saif Qaddoura. Hope you had a great weekend. Good morning, Meza. Good morning, Breva. Good morning, Patrick. And good morning, Shravan. Hope you had a great weekend. This week we have a short week in terms of data, but we have very important data. It's a busy week. I don't know if you guys have heard, but the US-Iran strikes got, resurfaced again. And now they're threatening each other again. So we'll see how that impacts the markets. But so far we saw gold drop in Asia session and the dollar gain some momentum. Even on Friday, before markets closed, we saw that the dollar gained back some of the losses that happened on Friday before market closed, and we saw Euro USD close below 1.14. The gold closed below 4,100, and so let's get to the economic calendar now, and then we'll move to the charts and talk about the price behavior, and align our technicals with our fundamentals as always. All right. Hello, Raya. Hi. Okay, so we start with Tuesday because today, Monday, we have nothing of high impact. So we start with Tuesday, which is tomorrow. We have the GDP coming from the UK. We have the quarterly number and we have the yearly number. The quarterly number is expected to stay unchanged at 0.6% growth for Q1, and the yearly number is expected to be at 1.1%, also unchanged for Q1. All right, so anything above that would be positive for the GBP. Anything lower than that would be negative for the GBP. And of course, we have the German CPI, which is expected to be a little bit higher, maybe because of the energy shock and energy prices that were happening in the past few months. Now, this number is going to be for June, so this is a flash estimate. It's not the real number. So it's expected to be higher than the previous. The previous was a disinflation of 0.2%. So minus 0.2%. The forecast is growth again in CPI or inflation by 0.1%. So if it comes in higher, that's positive for the euro. Negative, then it's negative for the euro, obviously. Then we have the Chicago PMI. The previous was 62.7. The forecast is a drop to 60. So this could actually mean negativity for the US dollar because this covers the manufacturing sector, regional manufacturing sector. So if it's lower than the forecast, it's going to be negative for the dollar. If it comes in higher than the forecast and higher than the previous, then that's obviously very positive. And if you want to compare it to other numbers, other manufacturing numbers that happened or like got released past week, then we expect this number to be higher than 60 because the manufacturing sector is doing well in the US because they're expecting, or like it's mainly because markets started to price in the normalization of energy prices and the demand in general. So that's why the manufacturing sector gained some momentum. All right, then we have the job openings coming from the US. It's expected to be slightly lower at 7.3, almost 7.3, in comparison to 7.6 previous. So this shows some weakness in the jobs market. But if it comes in positive, then it means that the Fed has more room to raise rates without harming the jobs market. Okay, and then okay, 1 second, let me read before we move to the next one. Good morning, Arif. Mirza says all the war impacts are on markets and on people's instant life and has become predictive pattern now. Correct, yes. Okay, then finally we have the consumer confidence, which is expected to be higher than the previous at 94.2 in comparison to 93.21. So if it comes in higher than the forecast or as expected, it's going to be positive for the US dollar. If not, it's going to be negative for the US dollar. So that's it for Tuesday. We only have Tuesday, Wednesday, and Thursday this week that actually have proper or like decent data points. On Wednesday, we have the CPI coming from Europe, which is expected to be lower at 3% in comparison to 3.2% in previous reading, but that's also a flash estimate. So because it's for the month of June, and the month of June hasn't ended yet, so that's just a flash estimate. So next we have the ADP non-farm employment change, which is the number that comes always before the non-farm payrolls. That's a preview of how traders should expect the non-farm payrolls to be. So it's expected to be slightly lower, like slightly lower. It's 122,000 in the previous reading compared to 118,000 in the forecast. So if it comes in higher than that, that's obviously positive for the jobs market. If it comes in lower than that, then that's negative for the jobs market. Next we have, sorry, 1 second. The S&P Global Manufacturing PMI. Okay, so this number is expected to be to stay unchanged at 55.7. That's also a good number. That's a relatively high number in comparison to, like, as a PMI reading, that's a very high number because it's above 50 and it's well above 50 at 55.7. So it's expansionary, and not only expansionary, but also deep in expansion. Then we have the ISM Manufacturing PMI, which is expected to be slightly lower. The previous was 54. The forecast is 53.7. So let's wait and see. If this comes in higher, then that's positive for the dollar. Lower, obviously negative. And then we have the prices reading, which are expected to be lower because oil prices dropped. So they're expecting to see lower prices or lower manufacturing prices. The previous was 82.1. The forecast is 79. So anything lower than that is actually disinflationary, and anything higher than that is inflationary. So finally, on Wednesday, we have the crude oil inventories. The previous was a draw of almost 6.1 million barrels. The previous week or the week before, we had a draw of more than 8 million barrels, which shows that the inventories are depleting at a fast pace. Now it started to actually slow down a little bit, but still 6.1 million draw is a lot of oil barrels that are leaving the inventories. All right. So this number, if it comes in the negative, then it's positive, or that's bullish for the oil prices, especially the crude oil, the what's it called, the WTI crude oil. If it comes in the positive, then that's bearish for the oil prices. Okay, so finally now we move to Thursday. We have the non-farm payrolls and the unemployment rate, average hourly earnings, and the initial jobless claims. Now, initial jobless claims is the weekly usual number that comes out on Thursday, every Thursday. But those numbers are meant to be on Friday. But because Friday is the last day of the week and Saturday is the 4th of July, which is the American Independence Day, so they moved the holiday to Friday, which became July 3rd. So the 3rd of July became the market holiday, and they actually pushed the non-farm payrolls, unemployment rate, and average hourly earnings back to Thursday, so that the markets will get the numbers before the market closes or on Friday. The U.S. market closes on Friday. Okay, so it's expected to be much lower. The non-farm payrolls are expected to be much lower than the previous. The previous was a surprise of 172,000. The forecast is 114,000. So if it surprises to the upside, that's very positive for the dollar. If it surprises to the downside, that's negative for the dollar, and obviously positive for everything against the dollar. The unemployment rate has been like moving, or like has been showing stability around 4.3, 4.4. So it's been 4.3 for a while now, 4.3%. The average hourly earnings is expected to stay unchanged at 0.3%. So Thursday, in my opinion, is going to be the most important day of the week in terms of data, because that's the non-farm payroll day, or NFP day. And finally, the initial jobless claims are expected to be slightly worse at 220,000 jobless claims in comparison to 215,000 jobless claims in the previous reading last week. So that's it. I'll be watching Thursday very closely, and like not only Thursday, but the situation progress between US and Iran. All right. Good morning. Good morning. Good morning, Wine. Okay, so Friday, as I told you, it's the all-day holiday in the United States because of the Independence Day, which is like originally on 4th of July. So the markets are celebrating early on 3rd of July. So yeah, that's it for the economic calendar. Do you guys have any questions before we move to the charts? Do you guys have any questions before we move to the charts? Again, do you guys have any questions before we move to the charts? So I guess the answer is no. We don't have any questions. So let's move to the charts. Okay, there it is. So as always, we start with the DXY. Let's first start with the monthly candle, monthly chart, because I want to see how this monthly candle is progressing. It's still very, very bullish, and it has like 1 day and 16 hours left to close. So as long as it closes at those levels, it's very bullish for the US dollar. Let's now move to the weekly chart. On the weekly chart, the DXY is still very bullish. It closed outside the band, outside the upper band. Of course, it got rejected from the 126-day moving average, which was an obstacle that we talked about last week and last week's live stream, Monday live stream. So once we break that, we have the 102 level to break. Once we break that, we have one more obstacle on the weekly, which is 102.7. If that breaks, we have nothing to stop us all the way to 109. Imagine DXY goes to 109. Imagine what that would do to the rest of the markets. Okay. Then we go to daily. Okay, so the daily shows also, yeah, shows bullishness, but last 3 days we're seeing some red. We might be retesting the 100.6, 100.4 levels before continuing to go higher, because that coincides with this previous high, okay, which was a resistance. Now it became support, or it becomes support. and it coincides with the 20-day moving average and the trend line that we have drawn last week or the week before. Okay, so we have two scenarios. All like either we go up from here, or we go back. The most likely scenario is we continue going up from here. If not, we go and retest the 100.6, 100.4 level before continuing the uptrend. Okay, makes sense. Let's see. That's actually a problem. That's why I told you this is the most likely scenario to happen, which is to reverse from here, because that's the 50-day moving average, and that's not a bad correction to this move. This could be like sufficient for this kind of move, and we can continue going up. But if it decides to go lower, the second scenario is we retest the 100.3 to 100.6 levels. So this area, okay? Yeah, so that's it for the DXY. I say now we move to the euro, which is the exact opposite. So we need to see an exact opposite reading on the euro USD chart. So yeah, now it's outside the monthly, outside the lower band on the monthly. That's a very bearish candle. Let's now move to the weekly. Okay, so on the weekly, we can say it closed below 1.14, which is actually a good area. So this level, remember, we had this level drawn like for a very long time now. So since we closed below and we closed outside the lower band on the weekly, we might be retesting this level, which is 1.1425, 1.1450, and then we can be targeting the next level around 1.12. So that's a 200 or a two big figure drop. That's daily. Okay, so on the daily, we might reach 1.1440, as I said, and then we can continue dropping towards this level, which is 1.12, 1.11. We'll have to wait and see, but for now, it looks bearish. We only have two scenarios. The first scenario is we go and retest 1.1425 to 1.1450, or we go and retest this level, which is 1.1530, 1.1550, which corresponds to 100.3 or 100.6 on the dollar index, while this one here, the 1.1425, corresponds to the slight correction or the slight room of correction that is left on the DXY. So it matches the both scenarios on 1 second. That's the 4 hours. Okay, so the 4 hours can be done, like as I said, 1.1425. If not, we move back above 1.15, but I doubt. All right, so that's it for euro. Let's take a look at Bitcoin real quick, because it dropped below 60,000 now. So let me check the monthly. The monthly looks somewhat very bearish. Looks very, very bearish. Okay. We have one obstacle in the way, which is the 50-day moving average, which is the 59,000 level. Okay. On the monthly, let me check the weekly. So how long do we have till this closes? A day and a half. On the weekly, okay, so last week we closed the previous weekly candle closed bearish. So now I don't see any reason why it doesn't drop to 54 or 53,000. Then we go to the daily. Yeah, same. This level is very important. So once we close below 58,000, I expect to see this big drop to 54, 53,000. Hello, Yahya, hello. Okay. So that's Bitcoin on the daily. So yeah, it's still on track. Let me check the Nasdaq real quick because it's been dropping. That's the monthly. Okay, the monthly is still very bullish. Okay, the weekly is bearish. Now, on the weekly, we have two engulfing candles, two bearish engulfing candles. One happened from the all-time high, and we saw a big drop from 30 to 27, 28. So that's a $2,000, 2,000 point drop in Nasdaq, and then it went back up and retested the all-time high around 30,000, and then it dropped last week to 29,000. So like this could be looked at as double top, or you can just say we have this engulfing candle, this engulfing candle. So any retest around this area, which is 29,700, would be a good place to sell. On the daily, we broke below this trend line, which was very steep. We broke below, and we had this first leg and this second leg. So this is, let's now remove this. Okay, let's check the MACD real quick. Okay, so the MACD, you can see here, obviously, there's a negative divergence. So it's making higher highs here, but it's making lower highs here, which could indicate the start of a correction, but it's still too early to decide or confirm, because we only have two signs of weakness, which are the weekly engulfing candles and the daily divergences. Now, if we go back to the monthly doesn't look bearish at all. That's why I'm not very comfortable in saying, yeah, this is going to drop. But if it's going to drop, I think the next target would be around 26,600 or maybe 26,000 flat. So it's going to be around this area. Do you see this rectangle here that I have drawn here? This one, the dark green. It's going to be around this area. And I have, by the way, an alert around 26,300 on Nasdaq, because I might be interested to buy somewhere around here. Okay. Let me go now to Dow Jones. Is a different story now, because it's making new all-time highs. Last week it made an all-time high. Maybe because of rotations, but the weekly looks somewhat bullish. The monthly has to look bullish. Yeah, it looks bullish. Daily, you know, half. I wouldn't mess with Dow Jones, to be honest, because it is diverted. Like if you look here, higher highs, but here we see lower highs, which is a negative divergence. So it's due to correct, but like it's very crazy, because anything Trump says might just send it flying. So I wouldn't try to sell Dow Jones here, but it's starting to show some signs of weakness. Pardon me. Now there's the S&P 500 here. That's the daily. Okay, the S&P 500 looks more like Nasdaq than it does look like the Dow Jones. So on the monthly, it's still bullish, still above the upper band. On the weekly, it's identical to Nasdaq. We have two engulfing candles. So the next level might be, or the next target might be 7,100 or maybe 6,900. So it's going to be between those levels, unless it decides to correct big time to the downside. Okay, on the daily, same. It's going to be the same level I told you about. So yeah, that's pretty much it. We also have like a negative divergence. So all three US indices confirmed the same thing, which is we're going to see some kind of a drop in the upcoming period. I expect that to happen in the last quarter of the year. So now we're entering the third quarter, um, which is like July, August, and September. And then after those 3 months, or after this quarter ends, we're going to start to see some weakness in the US stocks or US stock market in general, and of course the US stock indices. Why? Because I believe that flows will, or like cash flows will start flowing outside of the stock market and into the gold, because I'm expecting to see a very strong movement in gold, or very high bullish momentum in gold by year end. So this makes sense. Like if the stock market is going to drop, this money has to go somewhere else. So where does it go? It might go to Bitcoin. It might go to gold, silver, like different assets, a different type of assets. Okay. So now we saw that the dollar index is still bullish. The euro is like showing or confirming the opposite, and the US stock indices are showing some kind of weakness, but still nothing confirmed, without any confirmations yet. So we'll have to wait and see, but we need to have this idea, or we need to have this piece of information in the back of our heads. In case it happens, we know what's happening. Okay. Okay, so now we move to gold, but before I talk about gold, let me go to silver real quick. So silver got rejected from this trend line around 56. It could be that this is the low, but I doubt. I'm still expecting to see 44, because the DXY is still expected to go much higher. So if the DXY goes higher, then I think silver is going to suffer more drops than what it suffered recently. So I think this is just it's just taking a breather, because here it faced some buying pressure around 56, because it's this trend line. But I think it's not going to hold for long. It might go up to 62 and then continue dropping to maybe mid 40s, 45, 46, something like that. So yeah, that's for the silver. And on the daily, it's still not positively diverted here. So nothing to look at. Let's go to gold. So gold got rejected also from this level, which is 950, 960. Let me go to the monthly real quick. The monthly looks very, very bearish. Okay. So we have two levels to be looking at, which are 3,800 and 3,600, as I've been saying for a very long time now. Weekly also looks very bearish. Even last week, after this rejection, it's still very, very bearish. We're still heading towards this level on the weekly, which is the 3,600. If it decides to like overshoot and like drop even further than this level, it might reach the 3,300. But I think 3,600 would be a great place to be looking for buys, or looking for long positions on gold. Okay, so that's pretty much it on the weekly. On the daily, okay, so on the daily, it's still trending downwards. The last couple of days were a little bit bullish, so we might see a correction towards 4140, which is 4,140, and then or we might like go as far as 4,200 before continuing the drop to this level. So we might go retest this trend line first, then continue dropping. But of course, even if we reach here, it's not a good idea to sell, because it might continue just going upwards. So a good idea would be to wait for a setup around this area. So I'm not telling you to sell around 4,200. I'm telling you to wait for a setup around 4,200. Okay. 8 hours real quick. yeah, it's a very clean downtrend, like lower highs, lower lows, lower highs, lower lows. No problem at all with that. So 4200 might be a good place to look for sells or sell setups. But on the 8 hours, like it got rejected from the 4100 area, which is the 20-day moving average as well. So we might be looking at a drop from here. We don't need to reach all the way up to 4200. We might just like um, call 4100 enough and continue dropping from here. So we'll need to wait and see. And that also depends on what US and Iran developments show. So if the war is back or the threats are back, uh, oil prices are going up, so dollar is going up, so gold is going to drop from here. It will not just like wait for the war to end. It will react proactively. Okay. Uh, okay, Mesa, no problem. You can send them on Instagram, no problem. I think you have a limited number of characters, or maybe you're using some words like war, something. So it's getting filtered. Okay, so that's it for the gold. We talked about this. Let's take a quick look at the GBP/USD. Okay, so GBP/USD. Okay, the monthly looks very bearish, but it could like just like close above 1.3260 and turn somewhat bullish for a while. But no, even the weekly looks very bearish. But you know, the thing that I don't like about the GBP is that it's ranging. It's actually ranging. If you look here, that's the top of the range and that's the bottom of the range. So it's been ranging for a while now, since July 2025. So almost a year now. This is the whole year, and it's been trending or not trending, trading sideways. So that's why I don't like GBP/USD, although we had a good trade. This trade, by the way, was taken on the live stream here on and a Monday's live stream a few weeks back, a couple of weeks ago. How do you handle aggressive moves like last week when you barely get any retracements? Usually my entries are based on retracements. Yeah, I think you mean that what do I or how do I handle them in terms of how do I not miss out on trades? That's what you mean? So if we're talking about entries and your entries are based on retracement, by the way, my entries are based on retracements as well, because mathematically, when I did my homework, if I wait for a retracement, that would change a lot in terms of risk reward. So like instead of just like buying or selling after a candle close, I wait for a retracement in the opposite direction to get my risk reward in a better place. But yes, how do you get in line with the moves? Yeah, I miss out on a lot of trades. I don't know if how long have you been watching me, but I miss out on a lot of trades, and I don't care, honestly. Like, if the market gives me what I want, I take it. If it doesn't give me what I want, I'm not going to chase it, because chasing the markets and chasing trades is going to be the most expensive thing you do in your life. So that's why, like, my answer is that I just like miss out on trades and say, okay, next time, maybe next time. But some trades I refuse to miss out on, such as like this very tempting trade on gold that I've been waiting for almost a year now, which is a drop to 3,600. So even if it drops to 3,500, 3,400, 33, I don't care. I'm buying at 3,600. And I'm protecting myself, or I'm protecting my account $1,000 to the downside. That's how much I don't want to miss out on this trade, because the price is very, very lucrative. Like, think of it this way: the all-time high is 5,600, and you're going to be buying $2,000 lower than that price, and the price is obviously going to go there sometime in the future, if not this year, next year, if not next year, the year after. So it's going to be very like, you're getting a discount price on something very, very valuable such as gold. That's why I don't want to miss out on this trade. But like, if you ask me about the normal swings, if you ask me about the day trades, the quick scalps, I don't care if I miss out on trades, no problem. Okay. So I hope I answered your question, Yahya. Guys, I think this is it for this week. We went through the calendar, we went through the charts, we saw how metals are reacting, we saw how US indices are reacting, and the stock market is reacting. We saw how the FX market is reacting. We compared between the DXY and the euro and other currencies against the dollar, and we saw that it confirms the opposite. Plus, we saw Bitcoin, which also confirms the big picture. So the big picture is as follows. We're expected to see more gains on the DXY, more drops on the euro, more drops on silver and gold, and more drops on Bitcoin, just for a small period of time, maybe next month, let's say, and then we start we reverse the whole thing, and gold starts going up, silver starts going up, Bitcoin starts going up, and like, they will be going in line with the DXY, while the stock market is going to be dropping. Okay. Law of riches. Why so less people on live? I don't know, and honestly, I don't care. We do our best every time, and whoever is here is most welcome. Whoever likes to watch this, then he knows that he gets so much value from this. I think the people here watching, like Yahya, Meza, the other guys, also know how much value we provide on this live stream, specifically on Monday. So I don't know, and I don't care, my friend, but I'm going to keep at it, and I'm going to give you value every single week. So whoever likes to watch, whoever likes to join, is most welcome. So what does it mean if the chat is printing bear candles and the histogram of the MACD is printing blue bars? Okay, that's a technical question. I'm going to answer it. What do you mean? If the chart is printing bear candles and the histogram of the MACD is printing blue bars, yeah, it shows that the bearish momentum is fading, and now it's turning bullish. But it's not that, like, let me tell you something. Do you see these two lines here, the MACD line and the moving average of the MACD line? Do you see those two? So if the MACD line crosses above this moving average, okay, you see like the histogram printing green bars, okay? But once it breaks below, see, once it broke below here, look what happened. The histogram printed a red bar. So if the candle or the chart is printing red candles or bear candles, while this is printing what's it called, green bars, it doesn't mean that, it doesn't necessarily mean that it's going to reverse, the trend is going to reverse, because look at here, this is a green candle here, or a green bar on the histogram, right? Okay, but after how many candles? And then look what happened after, a very big bearish candle on the daily. That's a very, very bearish candle. So it crossed above the moving average slightly. So we saw this green histogram, and then boom, look what happened. So I wouldn't be looking at the histogram like in isolation. I would be looking at it to be confirming my trend, to be confirming the overall picture. and I would be more looking at the divergences on the MACD. They're more important than the histogram. The histogram is just, or the color on the histogram is just a confirmation layer, such as also both of the lines breaking above the zero line is also a confirmation to the upside, while breaking to the downside is also a confirmation to the downside. Do you get my point? Yeah, well, I give light to the stream as well. Okay, what does it mean? Bravo, I hope I answered your question. All right, guys. So I think this is it for today. Thank you very much for watching. This week is going to be fun. This week is going to be presenting us with great opportunities. So stay focused and make sure to watch the live stream on Thursday. We'll be updating this analysis, and it's going to be very fun. Why? Because on Thursday, during the live stream, we're going to see the NFP get released and the non-farm payroll, the unemployment rate, the non-farm payrolls, and the average hourly earnings. So it's going to be very active in terms of volatility. So we're going to see a lot of volatility in that session. It's going to be fun. I'm going to be joined with Rosa and Salah, I think. So make sure to join on that live stream on Thursday. Take care of yourselves, and I'll see you on Thursday, guys. If you have any questions, you know where to find me. Take care of yourselves, and bye-bye. See you.